Hello everybody. Brian here at QuantLabs.net, September 4th. Just wanted to let you know, give you the reasons why you want to join the new Quant Labs at on Substack. I'm now moving pretty aggressively into TradingView. I just put up two videos a few days ago, actually yesterday. Simple debug logs with script from TradingView. So if you're into programming, doing algo trading, I know Python and other trading platforms, C++ are pretty popular for algo trading, but it's a lot more complicated. I've gone through various uh, webinars and streams and explaining why TradingView is better because it does all the heavy lifting. All the stuff is there, ready to go. All you got to do is just provide the trading logic and rules, build out the automation for your strategy indicator in TradingView using PineScript. I think they'd blow up if they used another language, but that's the way it is. So here they just put out this new feature, simple debug logs with PineScript in from TradingView. The other one that I'll be doing a webinar on tomorrow, September 5th, 7 p.m. Eastern Time, is easy backtesting with TradingView PineScript. So again, I'm going to show you how easy it is, how to target the right trading strategy with trading with PineScript and how they've built it out. I'm sure there's gonna be some new facilities coming. This is a huge one for debugging in PineScript. I mean, that should have been in place a long time ago, but it's there now. Also, the back testing is another big one, so I'll show you how to do that. So you can see how I'm moving into TradingView and PineScript for automated trading, and the other half of it is things like this. So I've provided tons of ETF analysis, and it's really goes deep by providing tear sheets. So what I'd recommend is just to take a look at this as another example on the deep analytics um, for ETF, and it covers everything. So what I've done is I've built out everything and put it into categories like based around commodities, overseas. And these are all US centric because that's where a lot of the ETFs are based. The providers are, you got bond, Bitcoin and crypto, econometric, currencies, Forex, and the USA highlights. So let's go through these really high level. So these are great for traders that want to kind of cut down on their analysis. This one is going to be very helpful when the markets turn. You may have a stock market globally that will basically get cut. They're saying up to 40-50% like it did in 2020, but the recovery won't be there because there's no demand. Um, so a lot of retail traders are pretty well getting decimated right now. If it's not going to be losing jobs, it's not going to be higher interest rates on payments for car loans and mortgages. If it's not into that, it'll be the AI that'll be replacing a lot of the job careers that are coming. So the demand from the retail side might not be there as much, and the demand just overall in business is going to probably plummet a lot, like it is in China. And I do believe that what's happening in China will go global in terms of their um, deflation, their real estate, because everything's all built around debt. And that's why gold is. I've seen gold now spiking for the last week. I'm now starting to see silver spike as well. So these will become your savior. Also, another top one that will be very helpful will be commodity. So what I can tell you from 2022, I would say 90% of all the ETFs out there lost money. So they were not profitable. So these you're able to see what the profitable ETFs are, and there's probably going to be maybe 5 or 10% of them. And these are the big ETFs. So if you got a huge SPY that's negative, how are you able going to retain your wealth? How are you going to be able to even grow it if nothing's growing? But there are pockets of certain sectors that will grow, and they will only be a week. It could be 2 weeks. It could be 4 weeks. It could be a trend for a couple of months. Nobody knows. So a good example would be oil. Oil did quite well just alone in August, and the big one that did well were gold miners. And this year in January, gold did quite well. So agriculture is going to be a big, big player come uh, when things go bad. You won't know what will be producing. So a good example is inflation. Food goes up, so you have different food crops that you can buy ETFs into and actually make money from it. So you could probably make some profit as those certain base food product go up. We're talking corn, sugar. Sugar is doing really well right now. And again, that's temporary, but look it up. Another one could be wheat, corn, soybean, all that like energy. So this could involve anywhere from oil explorers, producers, those that are part of providing services and that sort of thing. Obviously, gold's going to do well. I've talked about months ago the right gold player play you want is the ones that just not only go up in value, but will give you a royalty for owning their stock. Um, and I'll just hint it's Quebec based in Canada. And silver and metal is so you want to break out the gold from the rest of the metals. So there's silver. Another great example that's starting to kind of spike is copper. Why? It's China. Like I just watched some Bet David video on, oh my God, the real estate market's dying. But yet that just came out 2 hours ago. But yet he's not talking about what's actually happening right now. What's happening for the last week is the rise of copper price. And what that goes up is uh, the stock exchange in China, the CN50 CFD, as found on Oanda. So those are sort of scans I do to see these trends. So nobody talks about it, and nobody wants you to know about it because they want to be the early, the smart money basically wants to be in there making that, and then when people catch on, then what will happen is they'll pile in and they just use the smart money will use those new positions coming in with the dumb money coming in from retail traders and using that as an exit uh, as more liquidity comes in. So that's how the smart money does it. Again, nobody talks about it, and that's why you want to watch the order flow, hot capital flow, and that's what I do with the um, CFD and forex analysis. So when things are going bad, look it up. Again, Turkish lira in gold, euro and Turkish lira was doing well. Right now, probably one of the safest bets right now, and it looks like it's going to continue is USD Japanese yen. That's a safe trade for currencies as well. So we'll get there in a minute. Well, let me maybe go down to that. So as I said, currencies and forex, there are going to be currencies doing well. Right now, the China yuan is doing okay. There's just again pockets like I'm telling you of what's moving and what's not moving. There was instances for a couple of weeks where the British pound were doing pretty good. So you can buy ETFs that focus on that. So continuing along with that, overseas. So here in overseas, people may laugh that countries like Latin America or countries in Latin America are booming. Brazil, for a little while last year, Brazil, Argentina were booming with certain stocks in ETFs from those countries were doing really well. And they were also listed in the US and ETFs focused on that. And they were moving. Same with Mexico. Same with Asia and Europe. Some countries are doing well. Turkey, Greece were doing just amazing through the MSCI that you can buy. Again, how are you going to know that unless you are watching this through these type of analysis, which we offer. So for everything you see, you're getting is one price per month. Plus you get the automated trade on top of it. How much better that can get. And again, man, that's on TradingView. Okay. That's the number one investment platform on the planet, without a doubt. You can go anywhere in the world and use TradingView, depending upon the supported broker. A great one is Interactive Brokers. Now, combined with TradingView, you don't have Trader Workstation. You don't have the extra fees that you need for data. It's all part of the TradingView package. So I'm telling you, man, you don't get better than that. Also, we know about bonds. Right now, if you go into T-bill, thinking of G-bill, I think BIL, they're making money, and that's where people are taking money out of their banks
accounts and moving into those instruments. And you can do that through ETFs as well. Again, these are from big providers, Goldman Sachs, and Invesco, um, whatever else, ProShares. These companies are going to be around for a while. I mean, look at BlackRock. I hate BlackRock, but on the other hand, you play the game, right? Like BlackRock's not going to disappear when they're a 9, $10 trillion asset manager. Okay, Treasury is another one. Treasury is a different one because of the credibility of the U.S. So you got to know about that. If people are like lately, China and I think Japan have dumped a lot of Treasury. Who's going to buy up the new U.S. debt when the government of the U.S. is going to buy that debt? What I've seen, it's Britain. Don't ask me why, but there's that seems to be like this incestuous relationship between Britain, Cayman Islands, and the U.S. government. And yeah, surprisingly, Cayman Islands is one of the biggest buyers. Was maybe still is a fairly big buyer of um of U.S. debt. And why Cayman Islands? Well, we know Britain is through the city of London, where Rothschild, all the big money comes out of city of London, which is the pivot center of finance, really, not even New York. And a lot of that's going to come through and funnel through. Probably a lot of it's going to come from East because that's where a lot of the cash is right now. If it would have been China, I would also say the same thing about Russia. I think Russia oligarchs are still doing well, especially if they're living in Dubai, and they got cash and they're going to funnel it through weird things like City of London and then buy it through some kind of investment vehicle out of shell company out of Cayman Islands, buying up U.S. debt. So who knows where it'll go, but knowing this helps, right? And again, you can see that through the treasury. And again, I'll be putting all that sort of analysis behind the paywall on my treasury, all again for one price. And as I said before, uh, with the TradingView, one of the big benefits of that, you're going to get access to all of my invites. And I'll be inviting you into all of my current TradingView Pine scripts as well as future ones. And I've got a whole slew of them and I can bang them out very quickly. I'll show you how I do the back test. I'll show you what I look for. And to sum it up, it's really profit factor. So there's that. So going back to the ETF. So I talked about bond. Here you can see Financial Bond Corp. I don't know if that's going to mean a lot. Treasury, I think the US government's kind of like running out of steam. It's pretty evident because, again, they won't talk about it. They just won't talk about it. Okay. Bloomberg, CNBC, they go, oh, it's inflation because of supply cut. And look where we're at now. Or we're talking about, oh, the oil's doing it. And now they'll use climate change is driving up the inflation. No, that's all BS. If you ever took economics 101, high school or university level, what you'll quickly learn is you have high debt of national debt, and that's how the Western systems work on the financial, and that's all issued controlled by the U.S. and the Western governments. Um, that's all debt based, right? So you're gonna spend as a government like $32 trillion. The credibility of the country goes down the toilet, which is happening in the U.S. People are not buying up the debt when they issue it, so they're who's gonna fund the U.S. government now if the Asians aren't gonna buy it? That's another big question. You won't hear about that. But what's really causing the inflation is quite simple. High debt will cause inflation. The higher the inflation, uh, the worse off it is for people. And that's why you have a lot of economic suffering for a lot of people. And these governments secretly don't care. Okay, I'm telling you, they don't care. They're making money off of the pain of other people. One of the things that's going on is just actually two ways to fight national debt. It's either through inflation, and that's why it's the way it is, or and the governments, the politicians that are running for government every 4 years, 5 years, whatever it is, in Western governments, they have to ensure that their citizens are fairly okay for them to get voted back in. So you don't see the runaway inflation that you would get in large countries like, or other countries like Zimbabwe or Venezuela, or even just recently Lebanon's another great example. So that's what's going on. Um, I'll come back to crypto because that's an interest you got to know about what I'm going to mention here about crypto. So I've already talked about currencies. So certain currencies will do really well um, as well. USA highlights is a big one because this is US centric. So in there we cover everything from big tech to about Magnificent Seven, dividend income people use. I will tell you, dividend income is really paltry. I've seen the dividend income plus the interest based income is very small, even for a million plus within between interest and dividend, highly optimized by performing money managers combined, you might get $1,000 combined. Okay, so that might give you a little bit of security, fine. But there's going to be some haircuts coming in a lot of these investment vehicles, and these corporations, especially in dividend income, have no obligation to you, so they can cut. I mean, take a look at Apple; they could easily generate a huge dividend for people, but they don't. They don't need to. So that's a good example. So this may be passe at some point. Of course, I'll never tell you because companies have to survive, and some of the companies are on their last legs. A great one that I discovered was Exxon. That's going. Um, Exxon last year was doing really well. Obviously, they're an oil play. Oil's on the way out. So where are they going to go? They're going to go and focus on dividend income to stay relevant. Big tech, we already talked about. Take a look at what's happened with the Magnificent Seven now. They've come off a lot. They may start to recover, but that does not mean that's guaranteed to be sustainable. Especially for a lot of the big tech because they are very dependent upon the consumer. If the mass levels of the consumer's hurting, so will those companies and so will their stock performance. Momentum, that's pretty well dried up. Let's get that out of the way. That will dry up, especially in the equity field. Growth and value. I think growth will slow down a lot. Value, okay, fine. But as companies start to lose demand in their products because the consumer's hurting, this could be questionable too. Um, and again, there's many more other factors. I look at biotech, cloud, communications, Dow Jones, US gaming. This one is a surprise. This one's a surprise. And it's gaming, not video gaming. Actually, that can be doing really well. US gaming is also including betting, like Las Vegas and whatnot. That can do well in a bad economy because people are gambling when they're depressed. And if they can't find a job, don't ask. That's the way it is. US energy, health will do well as a defense play. So certain equity will do okay. Obviously, Nasdaq's done well because of the Magnificent Seven. Semiconductor, I saw this doing really well in the spring. The one that was pushing that out was TSMC, not NVIDIA. TSMC, the Taiwan Semiconductor Corporation. And that's why the US is really again gung ho on defending Taiwan. It's not because of the Taiwan government. It's not because of Taiwan. They like the people. The American government has a high leverage on TSMC because all the companies use TSMC to manufacture their chips. A lot of the chips are manufactured in the States, designed in the States, like they say in Apple, designed in California, made in China. But the chips, a lot of the chips are made in TSMC or sorry, made at TSMC, Taiwan Semiconductor Corp, and probably all of it a lot. So if that those plants go down for the U.S., they're done. That's why China wants those plants. And remember, China has always recognized Taiwan as part of its territory, and so that's why the U.S. government's really going to go all out to defend that for their own self interest on the semiconductor producers because the American government over the last 30 years, dumb as they are, like why would you offshore such an important integral part of your economy for your product and not just that, but for your own existence from a military perspective? Doesn't make sense. So obviously there's shorting. This could do well. Small cap, obviously that's more dependent upon the large caps. SPAC, that's a joke. Hasn't done all that much. That was just a trend, really. S&P 500. transport, really good one for early indicator on how the economy is doing, utilities. And as I said, out of all of these, there's 64 categories, right? So those are the major ones. And let me go back to crypto, or let me go to econometric. I know a lot of people want to play the real estate game. I think it's kind of stupid because I sat there with some of these best top 5% uh, allocators and family offices, and I asked them basically, and they're managing hundreds of $1 million for families. I asked them point blank. I said, "What is the most logical thing for people to make money moving forward?" They said, uh, "Real stock market." I totally agree because there's so many stocks, there's so many sectors, and there's going to be something producing. I used to say that about crypto. Well, look at crypto lately; it's not doing too hot. But let's go into real estate just as an example. So if you're into real estate and you want to buy real estate, we're talking homes and now commercial real estate. Might not be a wise idea because those sort of assets are very dependent on the economy, people having jobs, and da 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 da. And we haven't even talked about the global virus, the global sickness, as I call it. What happens if we go into another lockdown? What happens to all those asset classes? What happens to homes? What happens to real estate? Remember, when that happened, people would buy up property, specifically homes, in the hope that they're going to have a tenant that will help them pay their mortgage. And they're all levered up, these landlords. And what happens in New York State? What happens in California? People can't pay their bills. So people now don't have to pay rent. Okay. So you want to be set up in that high risk arrangement in real estate. I mean, it's one thing to own real estate um, for yourself uh, as a primary residence. Obviously, that's different. But when you're trying to use physical hard asset real estate as a investment vehicle, what we're talking about is if you're a tenant, if you have a tenant, you get a call 3 in the morning for fix my toilet. My furnace is out. Go fix it. This is a real problem that you don't hear on the other side of real estate investing. Um, and real estate, I think, is going to have a weird future. Why? Because look at places like in Berlin. Look at places like what's happening in the U.S. All this socialism going on. One of the things that people don't understand with this hidden agenda from, I have my theories on it and I know what they are. I'm not going to get into that. But what I'll tell you is that there's an agenda to get rid of people having wealth, having small business. They don't want that. They want to go after family nucleus or the nucleus of families. They're going after that. One other big thing that's not talked about in the real estate world is they're going after real estate. They do not want you to own real estate. What does that mean? Well, would you want to be in an asset class that could be at risk? And how will they get you out of real estate? Look at the economy. Look at people not having a job or a career now with the AI. Look at real estate in terms of what's going on with cities. Okay, cities have a way to decimate local real estate. Okay, real estate can be wiped out by one simple thing that nobody talks about. That is your property tax. Okay, we got. I'm in Toronto, Canada, and it's probably the fastest rising, and it's been like this for decades, decades. Fastest rising real estate market probably on the planet. Um, and Toronto and Vancouver are the top two. So what's going on here is property taxes will skyrocket. Why? Because we just got a new socialist mayor, Olivia Chow. Okay, and her husband was part of the Socialist Party. Now, this is from a local of Toronto. Lived here all my life, 50 years plus. So I know the city, I know this country. Why did Olivia Chow, the new mayor, get into mayorship? Because it's very simple. When people are living in condos or condominiums or flats, as they call them in Europe or in England, What's happening to them is their rents are going up, and they are now probably majority of the population in these cities. So what's going to happen? They're going to get angry. They're going to get angry at their landlord. They're going to get angry at the people that own homes. How dare you? You get to have real estate and I can't. So what's going to happen? Along comes some mayor candidate like Olivia Chow and preaches to them and say, "Hey, vote for me. I'll represent you in Toronto." So majority of the people that vote are disgruntled, probably millennial, and young people that are paying rent and barely getting by. And this mayor comes along and speaks their what they want to hear, and I hate to say masters at it. So now that they have this new mayor that's pro tenant, anti homeowner, or anti business, what do you think they're going to do? They're going to punish the homeowner. They're going to punish the business owner. And how they do that? Through excessive licensing to a business. Look at New York. Look at San Francisco. Classic examples. Or look at Vancouver. I've been to East Hastings in Vancouver. It's dangerous. It's one of the most dangerous streets, or was at the time, most dangerous street in all of North America. And these are drug rid, and the cities aren't doing anything about it because they want the charities to be a perpetual money machine for them. It's what's happening in San Francisco. Why do you think these charity workers and the CEOs of these charities are making like $600,000? It's crazy, and they're funded by cities. So it's all a perpetual BS machine. So you come along with this Olivia Chow socialist mayor. Now she's going to punish people through property tax by raising it to such excessive levels that will kill off the real estate market, quite possibly. And that's what could happen. And you're putting yourself at risk when you buy up these properties. And everyone goes, "Well, I'll move to Florida. I'll move to Texas." Let me tell you something. California in the 80s was a very wealthy state. Remember, Reagan was a governor of California. And for years, California was a conservative state and it was wealthy. Same with Arizona. And look where it's at now. I used to go to California instead of people going from here going to California or from Florida. I go to California. So look at California. It's like a zombie apocalypse now in a lot of the cities and Skid Row and LA. I've been there. It's horrible. I used to love San Francisco. I've been through the Tenderloin. I don't want to get into it, but when you bring in these politicians now and running the city councils, they're destroying these cities. And Toronto's next. Vancouver's kind of getting there too. And they're going to destroy via property tax and excessive small business regulation. And that's what's happening in Berlin as well, and throughout Europe. Okay, throughout Europe. So what do you do? If you want to play the real estate game, you've got to play it through REITs. Okay, real estate income trusts. Okay, I've watched this for the last year. Okay, there's ETFs that will focus on bullish bullish real estate ETFs. It could be shopping mall, shopping mall developers, the Smart Shop, whatever, where the WalMarts are going, where the Costco's are going. They're growing. Okay, they don't do well. Then there's the bearish ETFs that you can do well too. That's how you play the real estate game, and you're not having to fix toilets while you're at it, and you're not having your money tied up in these properties, physical hard properties. Um, and if you want to play it safe, personally, buy land. If you really had to buy something hard asset, but that still doesn't make sense to me because as part of my scanning, because I used to go in and look at what's performing. When the markets are doing horrible last year, there was a equivalent Texas uh, it was like an income trust ETF that you can get that is listed on the stock market in the US. I can't remember the name of it. It went from $600 to well over $2,000 like in a year and a half. And what was that about? Simple. Texas has so many colleges and state colleges that they own the land. So they put them in this trust. And at the same time, they're oil producing these properties are oil producing. Okay, so the oil companies come in and pay a royalty on top of fees to the Texas government, and then it gets fed back into this land trust, and it mushroomed 4 times. And you could buy that, and you could sell it the next day for just the commission of selling the ETF, and you can benefit from that. And it's highly liquid, but you're still getting the performance of land. You just got to find these things. It blows my mind that people have to buy real estate. Bullocks. Here's another one. Uh, Inflation fighting. Okay, so as I said before, inflation is going to be around for a while. I think inflation's sticky, and it's going to come back. So again, ETF producing ETFs that will benefit from inflation. So this is awesome, and this is again part of why you'd be a nut job not to join this. Um, you got TradingView to help you on a lot of scripts, and you got to know about the script or about the assets that's moving among. Let's just this is just ETFs, and there's thousands of them, thousands. But as I said, when things get bad, only maybe 10% will be profitable. And good luck in finding those. Those are hard to find. Or the bearish ones as well. So this is what you need. It'll save you tons of time because we're posting them every day. I've got files I could produce, all forward looking, blah, blah, blah. Anyways, I'm not going to get into it, but you'd be a complete fool to not take advantage of this. Really. It doesn't matter what you trade, real estate, gold, whatever else. And the thing is, when people say don't buy gold, these ETFs, okay, so what are you saying? That uh, BlackRock and Vanguard and all these kind of companies are like Goldman Sachs are going to go bankrupt over the next few years? BS. BS. They're going to be too big to fail. So I'm telling you, you don't need to listen to people like that. ETFs are here to stay, and that's why they're so popular. Not mutual funds. Um, Futures and options are not as popular as they used to be because of ETFs. They're low risk, low cost, and that's it. So we'll leave it at that. Yeah, I'm going to be keeping up this price for a while, especially on the annual. I am hoping to raise the price up to at least $100 in the next couple of months from the 47 for that on Substack. So let me just show you what I mean. If you go into my Substack, you just join anything and you'll see a subscribe and you'll get an offer of you have to be physically subscribed to get the offer to upgrade to the payment, the paying one that I'm pushing out. So if you want to miss out, that's fine. This thing's going to be really good, I think, over the couple of months between TradingView and what's posted on Substack. And of course, we'll still leverage my website, of course, down the road. It's just not my priority as it stands compared to what I'm seeing with Substack. It just brings authority and so many benefits. Anyways, that's about it. And again, I'll provide the link where to subscribe. But as I said, you got to become a free subscriber to upgrade to what I'm offering here later.